Stock Analysis. Today we are looking into Amazon. So I haven't reviewed them on the channel, I think, ever, or at least in a while. So we're going to get back into them, look through their financials a little bit, see how they've been performing recently, probably go over their latest earnings report, see how that did. And yeah, so if you're interested, make sure to subscribe and let's get into Amazon. So getting into Amazon, I think everyone kind of knows how the company operates. Online retail, basically. So, looking into some industry metrics first, gross merchandising is expected to see a significant amount of growth over the next year, going from 875 billion, should be billion, possibly million, um, volume, most likely billion, to 900 billion. Other than that, I don't know what the other metrics mean, so we're going to keep moving through here. So, market cap is sitting at 2.1 trillion at the moment. They IPO'd all the way back in 1997, so been around for a long time. Target price is currently at 267. Right now we're at about 205, so that is showing a decent amount of appreciation. And the long-term growth rate is just under 10%, which is pretty solid for what we've been seeing in some other companies. Looking at their growth summary here, sales look fairly strong. The big numbers here that I would say are the most important are just their net income and their EBITDA. So showing some very strong growth over the long term 10-year estimates at 71% for their EBIT. That's really good. Cash flow is showing a little bit lower, but even still, their long term estimates are really high as well. So, no big deal there, in my opinion. Let's get into their last earnings report now and see what they've been up to. So, let's see, fourth quarter results. Let's go into this first, and then we'll get into their metrics recap. So, a lot to go over here. I'm definitely not going to read through everything, but we will go through the guidance as well as some of the highlights up here. So, for their fourth quarter, their net sales increased 10% compared to a year ago. Other than that, North America sales increased 10%, international saw an 8% increase, and Amazon Web Services saw a 19% increase year over year. AWS is definitely going to be their most high growth segment that they see. I You hear about that all the time with basically everything possible. Tons of advertising for it, but from what I understand, and just based on the growth that they've seen, it is probably going to be the future driver of their company. Um, Operating income basically doubled or close to doubled year over year, which is very, very impressive. And net income also basically doubled year over year, which again is insane for a company that is this big. Um, those kind of improvements are crazy. So, full year 2024, we're seeing a lot of the same stuff. Free cash flow increased to 38 billion compared to 36 billion for the year before. So operating income and net income saw huge increases, but free cash flow only saw a very slight increase. So that is something to consider with all of that. Um, let's see. These are operational highlights. Now, I am not going to go over all of this. This entire section is just Amazon Web Services or AWS, which is what I was just talking about. Insane how much is going on with that, but we're just going to kind of highlight over everything. So, fastest speeds ever for Prime members, 65% more items to US Prime members the same day or overnight, record breaking, highlighting a couple days for just single day sales for the company. Other than that, there's a ton of different new things that are going through here, but overall, it's just a bunch of massive achievements for the company. A little bit surprising here, had the biggest quarter for Kindle sales in over a decade, with Kindles driving a 30% increase year over year. That's honestly very surprising. I kind of assumed that Kindle was dying, but it seems like they're making a pretty big comeback currently. So that's pretty interesting there. Looking at the financial guidance, so they don't give too much, but they do give first quarter 2025. Net sales are expected to be right around 155 to 151 billion, or around 5 to 9% growth. Um, Anticipates an unusually large unfavorable impact of approximately $2.1 billion from foreign exchange rates. Um, in the first quarter, the impact from leap year, which is just adding one day, added 1.5 billion in net sales, which is insane. Operating income is expected to be between 14 and 18 compared to 15.3 first quarter 2024. So expecting some big growth in operating income, but will they actually achieve that? We'll have to wait and see with their next report coming out. But overall, it looks like the guidance is fairly standard. So, saying that, let's actually get into their financials. So, first of all, before I start, I do just want to go over the chart. There's really nothing too spectacular with the chart. Their stock basically just goes up constantly. But what I will say is that they are in a very strong uptrend at the moment. It doesn't have the most perfect channel formation going on here, but it is clearly a very strong uptrend, and they are at the lower end of that right now. So you could consider this a solid short term buying opportunity just based on the way their support levels have been going. But overall, I would say that just me personally, I tend to stay away from mega cap companies just because it takes so much to move them that I don't feel it's really worth it, especially for short term trading. Um, that's just my opinion, though. So take that as you will. They are at the lower end of their current support range, which could be a sign that it is a pretty decent time to get in on a technical level. So, anyway, moving into the financial statements now, let's take a look at their sales growth first of all. So, very solid, adding nearly 100 billion. Well, actually, not really, adding about 70 billion in revenue year over year, which is amazing. Almost $2 billion a day being moved throughout this company. Essentially, if you do the math on that, operating income also looks really solid, and again, basically doubling that year over year, which is what we saw earlier on the earnings report. That is crazy. How much improvement there was. Same thing with net income. Amazon has for a very long time kind of been known as a very low margin company. So seeing them double their net income in 1 year, um, alongside very solid sales growth is honestly kind of very good to see. So I think this margin right now is probably right around 8 or 9%, compared to probably 3 or 4% last year. So don't take those numbers too seriously. We will get into the actual set ratios and percentages later, but still, that kind of growth year over year is insane for a company that's this big. And I think that has a lot to do with just how many people are now using their Prime subscription, which is really good. That's very solid. One thing I will say, which is very surprising for a company, especially one that's this big, that's so profitable, they are increasing their total amount of shares every single year consistently. Now, there could be a couple different reasons for this. They could use it as stock based compensation for their employees. Um, it could just be part of the company's operations where they do sell off some of their stock, or I'm not really sure. But with a company like this, I would say it's not really that concerning. However, they are also adding a pretty decent amount to their total amount of shares every year. It looks like it's right around 1%, which isn't crazy. But when you get to a super mature company like this, especially one that doesn't pay a dividend, um, it could be a little concerning long term. But for now, I would say it's not really a big deal. Um, but anyway, moving on. Looking at the balance sheet now, they have $104 billion in cash, which is insane. Tons of growth in property, plant, and equipment over the past few years. That's where a bulk of their asset growth is coming from, alongside building up a massive cash pile as well. So pretty solid there. One thing I will say is that they clearly have a ton of debt, but also with this company, that really isn't that much. So 130 billion seems absolutely crazy, but when you consider that they have 285 billion in shareholder equity and another 100 billion in cash, it's really not that big of a deal. You could also see their debt situation has been improving a little bit over the past 2 years, dropping down from 140 billion, which is pretty solid improvements. They're clearly putting a lot into reducing that debt despite how high it is. So I wouldn't really be concerned with that at all. Now let's get into the cash flows. So I'm expecting, again, very good things here. So operating cash flow, we already saw had huge improvements year over year, really being highlighted by that doubling of their net income, which is definitely going to help with cash flows, of course. Looking at investing activities, you can see they have been very consistently acquiring other companies, other assets every single year. And last year they spent around $7 billion on doing those kind of acquisitions. They have been selling off some fixed assets and businesses, but it looks like it's almost always, or most of the time, at least for the past couple of years, it's being outpaced by their acquisitions. And then for their purchases and sales of investments, it's kind of mixed. For the most part, just whatever they feel like they need to do at any given time. Looking into the debt situation, you could see they have been on again, off again, taking out, repaying, but the current trend is that they are repaying their debt, which is pretty good. You could see they did take out a lot over the lockdown pandemic era, which I think was probably a very good decision to do so. It clearly funded a ton of their growth, but overall, no big deal there. And then free cash flow for the past 2 years has been very, very positive. And one thing we do see with a lot of companies is that before COVID, they had fairly decent financials. Everything was really good. After the pandemic, everything dropped off massively and then they went positive again, but they just were never even close to where they used to be. And with Amazon, that is not the case. You could see they've had a ton of growth with their free cash flow. Um, Once they kind of moved past the pandemic era. So I think that is a really good sign for the company as well. And finally, getting into the ratios, we should see enormous ratio improvement over the past year, which I think is really impressive considering how big the company is. So, gross margin went up about just under 2% year over year. SGA to sales fell slightly. Operating margin went from 6.5 to almost 11%. And again, this is all in 1 year. So, when you have hundreds of billions of dollars in revenue and you are able to improve your margins as much, in my opinion, that is outstanding. So really just something to pay attention to. And I mean, you could see just based on the performance over the past, let's do the 5 year chart here. You could see that just the past couple years with all of those margins massively increasing, the company has essentially only gone up with this uptrend that they've been in. So pretty solid there. And again, net margin going up 4% year over year. That is fantastic. So one last thing, just to highlight it, their debt to equity is at 51%. So most companies are right around this level. For them, the larger you are, kind of the more healthier a higher percentage is, just because you have more capital available, more ways to get funding. But for Amazon, I would say this is very good. You could see they've reduced it massively over the last few years as well, where their average used to be well over 100%. And this is actually the lowest they've seen in probably over a decade, if I had to guess. And yeah, this is the lowest they've seen since 2012. So really solid debt situation at the moment. I would not be concerned about their debt at all. But anyway, that's all I have for Amazon today. Thanks for watching. Make sure to subscribe if you haven't, and I'll see everybody in the next video.